All right, so today I wanted to double down and look at GPIC, the ETF GPIC. This is from Goldman Sachs, and I really wanted to emphasize it because I love this ETF. I think it has an amazing combination of growth and income. And as a result of that, I think it's one of the leading income-based ETFs that's tracking the market, in this case, the NASDAQ 100. And so let's just jump into it. Let's do some comparisons on GPIC versus some other top dogs in this space. And I'll emphasize on why I think GPIC might stand out as arguably the best. Let's look into it. All right, guys. First and foremost, I wanted to jump on the Patreon here and thank each and every one of you that have participated in the Patreon. Truly, your support goes a long way. If you want to join the Patreon community, we have two membership options. The entry tier gets you access to all of the calculators, plus gets you access to the community chat room. That's $5 a month. That's like less than the cost of a coffee these days. these days. And the elite tier will get you monthly coaching if you guys want to chat about finances and kind of do a quick financial discussion, 20-minute discussion. It's $15 a month. So please jump in if you want to support the community, support the channel, and you want a little bit of support for your financial journey. So jump on in, guys. All right. So GPIC. What is GPIC all about? All right. Well, that's the NASDAQ 100 premium income fund from Goldman Sachs. We have reviewed it extensively before, but just high level. The reasons to consider investing in this product is if you're looking for consistent monthly income and distributions. So this fund is aimed at providing a consistent rate of distributions for a total annual yield of about 9 to 10%, which I know is a little bit less than that of like a QQQI and others, but there's a reason for that. And it's going to maintain equity exposure with a little bit lower volatility due to its covered call structure. But the underlying asset for GPIC is, of course, the NASDAQ 100. So it's going to be, to its discretion, writing covered calls on a select portion of the assets under management for within the NASDAQ 100 space and spectrum. So a portion of the equities will be allocated to a portion of the assets rather will be allocated to covered calls, and a portion will be allocated to allowing for the product to grow, allowing for the assets under management to grow naturally, just like the NASDAQ 100 would. So if you're looking for a diversified set of income, if you're looking to get exposure to the NASDAQ 100, this is a great opportunity and a great structure and a great product that you could consider. And I do want to just call out something in a prospectus. It is kind of like there's a lot to be read here, but what I like about this fund and a key factor for me is that only 25 to 75% of the assets under management will be allocated to underwriting for covered call option writing. Well, what does that mean? What does that mean? Well, that means potentially up to 75% of the funds can be allocated to growth at certain intervals, and sometimes it's going to be a little bit less, a lot less. Maybe just 25% will be allocated to growth, just if the team sees a lot of market opportunities. But I love that. I love the fact that we're always going to have a set amount of assets under management that are allocated to just letting the ETF ride, letting the NASDAQ 100 ride, and capitalizing on the appreciation fully with a set portion of this fund. I kind of want that. I want the combination of great growth plus income. All right, and so that's where the harmony of this portfolio, or rather this fund, works really well. It gets you you're not writing covered calls on the full portfolio, the full fund. You're writing the covered call on a portion of it at all times, and I think that is the power of this fund. Also, they write, I believe, at the money calls, which allows for more income, and they can roll that weekly. So I think that is to me a game changer. A lot of these funds are writing 100% covered calls on their assets, and that's great for seeking a lot of great yield, but not amazing for NAV stability and NAV growth. I personally want to see the combination of NAV growth and income, like we talk about all the time on this channel. All right, and so here we're in Seeking Alpha. We're going to look at the comparisons between GPIC, GPIQ, QQQI, and IQQQ. That's from ProShares. I know some of you might say, well, why don't you throw in QDVO? Well, that fund isn't tracking the NASDAQ 100 completely. These are, and yes, I could look at like, I think QYLD, but that's like, to be honest with you, like a write-off. Like we want to look at ones that have performed really good and have at least NAV stability and NAV growth over time. So these are kind of like the top dogs in the space. All right, so looking at these funds, GPIC is still very new, guys, and all of these funds are very new. Within 3 to 4 years of inception, right? And so I'm going to do another series. I'm going to do another video on like longer tail covered calls and what they've like a 10-year or a 13-year covered call has looked like, or 7-year. We'll look at the ones that have been in existed for a long time. We'll do a series on that. But for now, I'm looking at just a comparison on the assets expense ratio, the MER. We can see that GPIC actually has the most favorable MER of all. So at 0.29%, GPIQ at 0.35, QQQI at 0.68%, IQQQ at 0.55. The assets under management for GPIC are second lowest, but $1.5 billion in assets under management, which is quite healthy. GPIQ, 30 bill, QQQI, 4 billion, and IQQQ, 244 million. Now let's get to the good stuff. Let's get to price return, all right? And really we only have, like I said, 2 to 3 years history. So these are fairly new, especially for GPIC and QQQI. But over the past year, we're going to focus on price return first, then go to total return. So over the past year, the price return on GPIC has been 11%. 11%, guys. All right? Compare that to GPIQ, QQQI, and IQQQ, all of which have a weaker price return. And I don't know about you guys, but in my portfolios, I want to see as much green as possible. I want to see a very high price return while seeking income. Maybe some of the pundits here might say, well, just invest in the QQQ, which is fair. But again, we are seeking a combination of growth and income for this portfolio and for the strategy. So in that way, in terms of price return, GPIC does take the cake. And then let's look at total return. That tells a little bit of a different story, but actually a good story for GPIC. So GPIC comes in second at 23.45%, followed by QQQI at 23.59%, whereas GPIC and IQQQ over the past year have delivered 18 and 21%. These are all still amazing yields. These are great total returns. But then again, guys, like this is just 1 year. We've been in a bull run. We want to see what happens over a longer period of time. And admittedly, all of these funds truly are quite new. But as far as what we've seen, they have done a decent job at tracking the underlying index, QQQ, generating income to supplement your income and be somewhat close to the total return of QQQ. Let's add in QQQ to see. Total return over the past year. QQQ's done 25%, GPIC 23.45%. So you're giving up a couple percentage points for the benefit of that stable income every month, tax efficient income, mind you. All right. And for GPIC, as it is consistent with QQQI, the majority of their distributions recently have been return of capital. Now, that wasn't always the case. Sometimes they have had about 50-50 return of capital to ordinary income, but that's something we'll have to monitor via the tax forms and the monthly tax forms. But for now, what I've seen recently is they're very tax efficient. So for me, GPIC is the best growth plus income ETF, whereas QQQI is and maybe TDAC, once that comes into fruition and has a little more history, is your best pure yield seeking ETF. Now let's look at that. So let's look at the dividend yield. So for GPIC, we have almost 10%. For GPIQ, 10%, 10.7%. QQQI, 13.53%. IQQQ, 11.34%. Of course, QQQ, how many times can I say that in a row? QQQ is at 0.8%, That's not expected to have much yield, and that's why we look at some of these. That's why we look at covered calls funds as the differentiator to give us income every single month. So yeah, guys, what you just saw it. You just saw it. We have 10% or so, 12% price appreciation plus a 10% dividend distribution. That's like the best fund I've ever heard of in my life. That's amazing. That's truly the best of both worlds, and it comes from a reputable organization at a very fair expense ratio, and has done really well over the course of the past year, and truly over the course of its inception. Over the course of its inception, since 2023 in October, it's done 62% yield, 62% total return. Um, so really, you cannot go wrong with this. Of course, if you want the best possible total return, it's going to be the underlying asset, guys. It's going to be the underlying index, QQQ. That will get you the best total return. But if you want the combination of income and growth, I think GPIC is leading the race here, alongside some of the things that Amplify is doing in terms of growth plus income. But if you're looking for a QQQ specific growth and income strategy, GPIC might be winning the race. Guys, I would love to know your opinion on this. Are you invested in GPIC? Are there others that you think are better for growth plus income? If so, leave a comment in the comments below. Outside of that, guys, all the best and cheers.